I'd actually like to start with Tesla, just because, I find it fascinating, this connection between Musk's behavior involving Twitter and the continued decline in the shares, except for yesterday. What's your take right now in terms of Tesla, whether he really is damaging some of the brand loyalty that the company has engendered over the years?
Well, good morning, David. I certainly don't think that Musk is helping Tesla's cause in terms of his association with Twitter, the actions he's taken there, the proclamations that he's made. But I do think the bigger fundamental issue is that Tesla appears to have demand issues. And we've seen them last quarter fall a little bit short on deliveries. And we've seen pretty aggressive price cuts in China. Now we're seeing discounting in the U.S. and we're seeing discounting in Europe as well. And so if you have a company that's growing or hoping to grow 40, 50% per year and it's struggling with demand, that's the principal fundamental issue. But to your question, absolutely, I think, to some degree, Musk may be disenfranchising, potential Tesla customers, and that's certainly not helping.
Yeah, we had a guest on yesterday, though, Gary Black, who owns the stock, said, at least on his numbers, he thinks it's trading as low as 22 times earnings, thinks it could earn as much as $20 a share, by the way, by 2026, arguing the stock could be as high as $800. Tony, what's your take?
Well, we're at a little under $5 for next year, so that means the stock's still trading at above 30 times earnings. We are in a higher interest rate environment. And so when you look out to the future and you look at earnings, you have to discount those at a higher rate. And that's part of the reason we've had a pullback in high multiple stocks. I think the fundamental question is, until about 6 months ago, everyone thought Tesla could continue growing at 50% a year for the next few years and sustain or enhance margins. And I think we're seeing real demand issues. And so that means either the growth rate's going to have to slow or they're going to have to cut price like they're doing now and have lower margins. And I think for the next couple of years, given that there's no new high volume product coming, that's going to be a real challenge for the company. So I think it's difficult to say beyond 24, 25, because there may be some new products, and the EV space is pretty dynamic in terms of competition. But when we look forward over the next year or two, I think those are going to be challenging relative to the expectations that Tesla has set with the investment community. And that's the principal reason we're seeing this, continued pullback in the stock.
It's almost at your price target, Tony, at 100. You're at 150, underperform. Sounds like you might have to take that lower. And it also sounds like the Twitter purchase doesn't even factor into your bearish thesis. Is that right? The fact that he's had to sell stock, that he's clearly been very distracted, and now there are concerns about buying a Tesla and what that brand image means. Right.
So, yes, we think the risk reward, we've had this price target for, I think, a year and a half. And, when the stock was at 400, I think, a lot of people thought, oh, well, this will never happen. And there have been a number of factors that have contributed to that, principally that we've had a big market drawdown and inflated valuations across the board have come down. But my principal concern is more fundamental. I do think we've seen some impact on the shares because of Elon's association with Twitter. I think the stock was up yesterday in part because people were relieved. They said, oh, well, the stock's been going down. That's because, Musk has been selling shares. There's an explanation for that. We feel a little bit better. But we're seeing the shares down again today. And I do think that, the principal reason remains demand concerns. Overnight, there was, incremental discounts. Tesla's now giving not only $3,750 discounts on cars taken in December, but they're also offering 10,000 free miles of supercharging. That was a new promotion that occurred overnight.
Interesting. All right. Yeah, because obviously our viewers just saw stocks down 31% since they closed the Twitter transaction. Obviously, he's also banning journalists from the platform as well. Tony, we didn't even get to Apple, but somehow I think we'll have you back soon enough to talk Apple again. Appreciate you taking time this morning. Thank you.
My pleasure. Have a great weekend.